There's no doubt there was a lockdown impact to some of these tech companies. People sitting at home, taking another Netflix or taking a Netflix subscription if they hadn't had one before, or buying goods from home. You know, activities changed, and you are seeing an unwinding of that. So I wouldn't be surprised to see that growth earnings come off a little bit, but that's not to say there aren't opportunities out there. We think there are. You know, the last time I was on the show, I mentioned Xero. We think Xero is an outstanding investment here at this point. Valuations come off a long way. You know, subscribers are growing at 20% and revenue's growing at 30% across sort of developed markets for them. So we think that's a great opportunity. One other one I'll mention too, James Hardie. So James Hardie, again, has also come off a long way. It's a housing sensitive stock in the US. US housing, yes, there are some indications that it's rolling over a bit, but stand back from it for a second. A huge underbuild coming out from the GFC on US housing. We've only very recently got back to some type of more sustainable level of construction in the US. James Hardie's trading at equal to the lowest PE it's traded on since the GFC. They're taking market share, and it's a product leader in its category. That's an outstanding stock here at this point in time, I think.
So you've got a local growth name, you've got a local cyclical as well, linked to the US housing market, of course. What are some of the other areas that you like at the moment, whether it's equity markets or other asset classes, given where we sit in the cycle?
Oh, well, look, Scotty, I mean, you and I have discussed my view on bonds.
Still uninvestable?
Honestly, I think that's changed now. You know, real yields in the US, look at 10-year real yields, they're now positive. And I think to be getting paid something positive to put back some protection into your portfolio now makes sense. When real yields were negative, it just made absolutely no sense to have a cost to your portfolio to take that protection. The protection was questionable, and you've seen that over the last few months. I think the protection element of bonds is now back. So if we see a correction from here, you get paid in bonds to hold them. So I think they're investable again.
Any areas of the market that you're a bit caught in at the moment, are not really confident about, given where we sit? Because there's lots of people still talking about economic risk, no recession, potentially down the line, a very aggressive Fed. Anything you don't like at this point?
Yeah, well, look, so value's been back in the last sort of 6 months or so. I think you want to be careful about some of those cyclicals from here, and economic sensitive stocks. Economic growth globally has to slow. I mean, there's no question that, you know, the RBA and the Fed, they have to engineer a looser employment market. So unemployment has to rise, economies have to slow a little bit. It's a big question about whether they can do that without us going into recession. I think it's difficult. So in that environment, you want to be reasonably careful about economically sensitive companies.
Can I ask you about the banks? It's still the biggest component when it comes to the local market here, even with BHP's arrival when it comes to fully domiciled here locally. So how do you see the banks, given those potential economic risks moving forward?
Yeah, so I mean, the banks have been great performers over the last year or so. And a huge amount of that was the COVID fear of bad debts, you know, being reversed.
Yeah.
There's been zero bad debts, and in fact they've written back all the provisions that they've taken. So it has been a great environment for the banks. From here, we find them pretty unexciting. We struggle to see how they're going to grow. They're not overly cheap given the jump that they've had in the last year, and we think their lunch is being eaten by by new financial companies coming in, nibbling away at their market share from various different aspects. So yeah, we struggle to get excited about the banks.